I want to shift gears here a little bit now, Kyle, and we want to go into the newer segment called the Don't Do That segment. You know, a series of people out there that are perhaps doing the wrong thing, and it's going to be our job to dissect that. So let's start with a scenario. Bob, he's very generous, and at the end of the year, he writes a check for $5,000 to his church, and then donates $10,000 worth of appreciated stock to his alma mater. He files his taxes, claims this $15,750 deduction, and a year later gets an letter from the IRS. Kyle, you know, from the very brief description we have here, what's the mistake Bob made?
A couple things. One, you need to have a receipt for the charitable organization. That is absolutely crucial. You have to have some kind of documentation or proof that says, hey, I in fact did this. A canceled check or a bank statement is not proof. That will not count. And then in addition, on the stock contribution, in true IRS fashion, another form that you have to fill out when you are donating other assets other than just cash. Stock is especially, there's another form that you have to fill out that says, let the IRS know this is not a cash contribution, this is just stock. Yes, those two things are crucial to make sure you have all your ducks in a row when you are doing your charitable giving.
Nope, that makes sense. So to your point, Kyle, Bob, don't do that. You know, don't do that. Make sure you get a professional like Kyle to help you with that.
Yeah. So just one more point I want to make on the receipt that you need from the charitable organization. The language on the receipt also matters. It must say you receive no goods or services for this donation. Here at Modern, if we see a receipt that does not have that language on it, we will make you go back to the organization to get that language on it. That is of utmost importance. The IRS will deny that contribution if that language is not on there. I know it's a small item and is often overlooked, but you should be double checking your receipts to make sure that language is on there. That is very, very crucial as well.
No, that's a great point, Kyle. Because I mean, it sounds like Bob did his homework here, but you know, the IRS doesn't play games when it comes to these sort of things. And so the first thing anybody always wants to make sure is that, and I would say too, is you want to make sure that the organization is in fact a nonprofit or a charitable organization too.
Yes.
I think that goes without saying, but you would be, you know, I'm sure you've seen it before. You would be surprised with some of the things that comes across our desks.
Oh yeah, the IRS does have actually a pretty good search tool on their website where it makes it easy to type in the name of the organization, and it should pop up on the IRS tax exempt list. So if it doesn't, then I would go back to the organization and maybe confirm, hey, I just want to make sure that we're good here.
Yeah, no, that's a great point. And so you never want to have people make tax related mistakes, but if they are, make sure everybody else learns from them. So Kyle, you know, we talked about different tax strategies. We talked about how the OB3, again, I appreciate you mentioning that to me. I'm going to have to steal that, but we talked about the effects that had on charitable donations, itemized deductions. You know, we talked about some strategies here. We talked about a real life case, and we talked about, you know, our poor friend Bob here and what he shouldn't do. What else, you know, should listeners that are listening to this or viewers consider as maybe they're called to charities, or maybe it's something they've always wanted to do? What's something that, you know, we covered today, or maybe we didn't cover today, that we want to reiterate?
Contrary to what most people think, the tax code is actually here to help you, especially in the charitable giving arena. There are a lot of strategies that we can implement that can benefit you and the charity. So it's just kind of based on everybody's individual situation. But if you are charitably inclined, we here at Modern are well versed in all the strategies available to you. We'll go through your tax plan, your goals, what you're trying to accomplish, and we'll kind of devise a strategy that fits best for you.
That would be my takeaway, is you want to have a team approach. You want to have, to your point earlier, you said it best, left hand needs to know what the right hand is doing. And so I go back to my client that we spoke about earlier. And if you're listening to this and you're making donations or you're making contributions, even if it's just the weekly amount to your church or an organization that's especially your heart, is if you're having somebody assist you on either the tax side or your financial planning, make them aware of it so that way they can help you help the charities. Because again, to your point, which is the whole premise from the episode, is that we want to encourage people that want to be generous with the resources to be generous, but we also want to do it in a way too that can be tax beneficial to them. So again, Kyle, thank you so much for joining us today on America's Wealth Management Show.
All right, thanks for having me.
The views expressed represent the opinion of Modern Wealth Management, LLC, an SEC-registered investment advisor. Information provided is for illustrative purposes only and does not constitute investment, tax, or legal advice. Modern Wealth Management does not accept any liability for the use of the information discussed. Consult with a qualified financial, legal, or tax professional prior to taking any action.